Good evening. Today, beginning the week of November 7th, 2022, we continue to see the resilience of the overall S&P 500 index despite the recent bearish press conference by the Fed Chairman Jerome Powell last Wednesday, which contradicted the earlier press release that hinted at slowing the velocity of Fed interest rate increases. This raises the question if the market is finally looking past the current inflation and anticipating a fall in both inflation and rates as the market is a forward-looking indicator. This view is reinforced by the forward-looking inflation indicators such as the Case-Shiller Home Price Index. It is notable that during a recent lecture, Jerome Powell was noted to place more weight on lagging CPI and PCE index as a measure of inflation than the leading indicators. It is also interesting to see the continued resilience of the overall Dow, S&P 500, and Russell index despite the deterioration of big tech and FANG stocks, which point to a decoupling of the overall market to these previously heavily weighted stocks. Looking at the S&P 500 chart, it is also notable that the recent pullback last week, the critical support level of 3,700 was maintained, and the continued price action seemed to be continuing to follow the rising price channel with a resistance level near 4080 or 4090. The long-term trend continues to point lower. Some analysts are anticipating touching the 32 to 3400 level in the first half of next year. However, there is a growing minority of notable analysts joining Tom Lee, to include Yardeni and Mike Wilson, calling for a continued short-term uptrend to year-end. The question remains if the ceiling will be broken or if the bear market will remain intact. Notable events: current third quarter earnings to date show okay overall reports, with 71% beating estimates with a 2.5% upside surprise. Current forward S&P earnings estimates are at 235, putting the current S&P valuation at 16 times. Upcoming events this week that may impact markets: the midterm elections occur tomorrow, November 8th, so remember to get out and vote if you have not done so yet. A Republican takeover in either the House or the Senate would be bullish for the market short term, as the elephants are seen as more fiscally conservative and will likely place a larger roadblock on further fiscal expenditures by the Democratic agenda. October CPI results will also be posted Thursday, November 10th, along with the jobless claims. Some analysts are stating that anything other than an extremely hot number will be bullish for markets. Fed nowcasting are predicting slight fall in both headline CPI to 8.09 from 8.2 in September and 6.58 in core CPI from 6.6 in September. If these numbers prove to be correct, it will likely trigger more jawboning on whether we have or are seeing peaking inflation. And with that, I'm signing off. Have a good week.